Hey everyone, this is Brian Mallory for SharePunter.com. Today is March 11th, 2015, and some choppy, volatile markets here over the past couple of weeks. It definitely has a downward inclination to it, and for that reason, I thought it would be a good time to go over the general markets first, and then as the title of this Hangout suggests, how to be a tough trader in a tough market, because it is a tough market. There'll be a lot of people that will be, pounding their fists on the table saying, hey, see how great of a trader I am. Hey, look at this, look at that. This is how much money you can be making and all this stuff. You know what? To the side and just accept the fact this is a tough market. And we'll get into that in a second. For now, I'm going to get into the S&P 500. We had a huge sell-off yesterday. We had a huge sell-off on Friday. We had an intermediary bounce on Monday, and we have even less of a bounce today. If you look at the 30-minute chart here down on the left-hand corner, you can see where there's the potential for a double bottom here shaping up. Basically, you have, the first bottom here, the second bottom there. Look at it on the 5-minute chart here in the upper left-hand corner. You have a much better defined double bottom. I don't know if it's going to confirm it in the before we get to the close, because what we have seen so far today on every since the 11 o'clock hour, every one of these breakout attempts have been met with selling, been able to drive the price actually lower on the day, but they've been able to keep the market from actually going anywhere. So we're seeing that right now as we speak, that the market looked like it was almost about to confirm that double bottom, but so far no cigar. So now so let's look at the daily. Well, you know what, let's continue to look at the 30-minute chart here, if I can pull up the right time frame. There we go. Essentially what we had here was a massive head and shoulders pattern that I talked about a lot in the chat room, and also on my daily trading plans that I publish each morning before. And so left shoulder here, you have a head there, and then you also have the right shoulder over here. It confirmed last week, and since then it's been selling actually in a very nice technical manner here. You can see now the moving averages on the 30-minute chart are all above, except for some of these short-term ones today, are all above the price action. And to me, if you look at this chart purely from a technical standpoint, it looks like an easily rising trend line off of the January lows. You can see it a lot better here if you look at it. Actually, it comes off the December lows. On the daily here, you can see where it's bounced nicely each time it's ever tested it. So if it does get to that point here where we're testing that 2015, I'm going to probably be very aggressive of covering any remaining short positions that are in my portfolio at that point in time. So that's the S&P 500. The T2108, which is the percentage of stocks that are trading above the 40-day moving average, is seeing a little bit of a pop today. It dropped 20% yesterday. That's significant for the T2108. And like I said, it's the percentage of stocks that trade above the 40-day moving average. It's getting a small bounce here, mainly in the afternoon. For most of the day, it's either been underwater or flat. So on the T2108, where it really comes in handy here, and I'm going to put it on the chart here, where it really comes in handy is when it gets down to like the 13s, 14s, and 15s, because a lot of times that's where you see significant market bounces take place at. And it's been since October since we've seen any kind of move down to that level. But what the T2108 also does is help you see where the tides is starting to change in the market. So for instance, back in February here, we started flatlining here. That's where the market got really choppy, because essentially stocks were not moving. And then we got this break, and this is where I started getting into SPXU, is when we started seeing this break take place here. And then finally, the bottom came out from underneath it on Friday, and then again yesterday. Now back to the S&P. One other thing I wanted to do is go over the Bollinger Bands here. Let's see here. Make it where you can see it a little bit better. All right. You can see that we got outside the lower Bollinger Band yesterday, but we cannot get it back inside that Bollinger Band. The bulls cannot get back inside it yet. So we had a small bounce on Monday, even less of a bounce so far today, and it just doesn't look like the bulls are able to do anything to get back above 2049 on the daily. So yeah, there's really nothing for the bulls to be excited about with today's move. There's no sign of a bottom. And if you look at the S&P 500 on a lot of these downturns of late, I'm gonna go back to getting rid of these Bollinger Bands. If you go back and look at the bottoms that have been formed before, there's significant bottoms that are being formed here back in February, again here in January, and then again in December. You go back to October. Now you're going to say, well, look at October. There wasn't much of a bounce there. Actually, there was. Look at this was the bounce right here, even though it was a red candle. But look how far it had to come off the lows. It went from like 1820 or so all the way up to a close of 1861, like a 40-point rally. And the next day, it gave up some of those gains, but there was a bottom being formed here. That's where you would want to get covered. Now, fast forward to today, you're not getting any kind of bounce that's anything like what we have seen before. That initial bounce typically is a very strong bounce, and it sends shorts to cover their positions. Right now, we're not getting that, and we're still looking at a potential day in the red for the markets. All right, enough about that. Let's go ahead and talk about trading in this market, because December, January, February, March, it's not an easy market. This isn't like 2013 where the market goes up, some S&P goes up some 30% or 25% or whatever it was up that year. That's not the kind of market that we're dealing with. It's not like 2009 where after the March bottom was put in place, it just rallied for the next five years or so. It's not like that right now. It is a very difficult and tough trading environment. And so what happens is that since the bottom back in March 2009, a lot of people have been lulled into this false sense of security where they just think the market's going to constantly keep going up. And it still may do that, okay? Maybe this dip in the market gets bought up tomorrow and we're off to 2,200 this time, okay? There's no way to know that. However, what we're dealing with in front of us right now is a market that's showing signs of changing. Now, does that mean it goes down to 2014 and then bounces back up to new highs over 2130? I don't know. Does it mean that it goes down to 1900? That I don't know either. Or 1820 where the October lows were? I don't know. Okay. The key is being a successful trader doesn't mean that you is ultimately going. Okay. The key to a successful acting to what the market is doing and positioning yourself accordingly in such a way that you're managing the risk and preserving your capital, even in the best of markets. And 90% of traders, maybe even that's a conservative estimate, but let's say 90% of traders in general will completely lose sight in good markets of the risk. They are so oriented towards how much money can I make off of this trade? Oh, this trade has this potential to go to the moon. Oh, this trade has the potential to let me retire early. That mindset is going to be a killer at your ability to succeed at trading the stock market. I'm telling you guys, as much as I know anything, if you get sucked up in the potential profit off of a trade and completely ignore the risk aspects, you're going to get burned. So what does that mean? Like in the market right now, where we're getting, chopped up into, tiny bits and pieces here. Well, a lot of them are doing that because they're not managing the risk appropriately. It's okay as a trader, okay, to go through. Nobody is going to do that, okay? I know there's a lot of, guys out there that pump up the trading lifestyle. They'll say, oh, it's great because you can can spend time with family. You can take the day off whenever you want. You can they're just pumping it up all the time. Oh, it's the best job in the world and everything. And for me, it is the best job. I really like trading and everything, but that doesn't mean that it's not frustrating at times. Okay, it doesn't mean that there's not going to be times where it is extremely difficult to squeeze out a profit, because it will be that way. It's if everybody could do trading, everybody would be doing it, because it's the one profession that in theory you can make $1 trillion. Yes, trillion with a T, in theory, but in reality it's hard to even profit in the stock market. It's hard to even profit in a profession where in theory you have the potential to make $1 trillion. Okay, so how do we balance out those two extremes? Well, first of all, you got to just you got to accept the fact that it's hard to profit in the market. Okay, so you're going to have to do something that nobody else is doing and do it. And the other thing is, you got to ignore the fact that the stock market offers unbridled riches at your fingertips. Okay, it's really a false illusion. If it's like a facade or a mirage, or I think that's probably the word I'm looking for, when you see things in the desert and you're not sure. You think you see like an oasis, but it's really just a pile of sand in the desert. That's really what happens to traders. They get caught up in the thought process that the stock market's going to make them bukus of dollars. Okay, and then you got all these newsletters and you got all these financial gurus that pump you up, thinking that if you follow them, you will never have a bad day in the stock market again. Okay, you got guys that will go rent some limousine from a car dealership and it to be their own, or I'm sorry, not a limousine, but a Lamborghini. They'll serve women. They will talk about how easy it is to trade, and being a day trader, they can do this and they can do that. But then the reality of it, it's hard to shake loose the market, even when you're having a good day. It's hard to even enjoy really. Always saying to yourself, man, you know what? I still did X, Y, and Z wrong on the day. That's just the nature of the market. And that's why I'm telling you, if everybody could see that the market, everybody would be trading. If there was no slumps in the market, everybody would be trading. But the problem is when they get into these slumps, when traders get into these slumps, they lose all control. I mean, they watch the world burn around them, pretty much, or their world burn around them. I mean, they make bad trades. They don't get out of losing positions. They want to have a sense of hope, a sense of belief. And listen, a lot of people will tell you, get rid of the emotions, get rid of, be emotionless when you trade. That doesn't happen. You're going to be emotional. God created you to have emotions. And when it comes to money, you better be darn sure you're going to have emotions. It's just the nature of the beast. But it's about how you allow those emotions to infiltrate your decision-making in the stock market. Listen, when I get stopped out of a stock, I don't like it. I hate it. Okay? I despise it as much as anybody else, as much as any member of the Share Planner Splash Zone. I despise being stopped out. But I've come to accept it as being part of the trades. I realize that those stop losses are there for my protection. They're there to protect me against myself, because there's a part of me that never wants to give up on a trade. Okay, I always want to believe that I'm right on a trade, but in the reality of it, I know that I'm going to be 55% right on my trades throughout the course of a given year. Sometimes during a month I might go lower, sometimes I might be as high as 80%. Okay, but the reality of it, over the course of my trading career, I have been right about 56% of the time or so. Between 54 and 58%, is pretty much the balance between year in and year out. But I've also managed to, go through a lot of markets. Okay, 2008, everybody knows what 2008 was about. It was a great recession. The market drops, 40-some%, and there was blood in the streets. I came out with a profit on it. Why? It was because I was willing to adhere to the disciplines of the trade, not get caught up in the glory and the riches that the market might produce, because that's what keeps you in a stock longer than you should ever be in a stock. But instead, I just stuck to these stop losses. I got stopped out plenty of times. I made plenty of profits. I was short a lot. And I was also long quite a bit because there's opportunities where when the market bounced 50, 60 points on the S&P. So trading is going to always be tough. There's going to be slumps. The people who manage newsletters, they go through slumps too. I guarantee it, okay? They just don't like to show their past performance. I do. I'm pretty open with how I perform as a trader. If you look at my past performance and you look at it in scrutiny, I don't have huge drawdowns, but there's times where because I manage risk to a fault, and sometimes in choppy markets particularly, there will be times where the profits aren't rolling in like you'd like for them to. But because I stick to those disciplines, because I stick to the principles that have made me, gains year in and year out, at the end of the year, I do come out on top, because at some point during the course of the year, there's going to be trends. Sometimes those trends last for a couple of weeks. Sometimes they last for a few months. And then you've had a trend that's gone from 2009's March bottom to the team. So what I encourage you guys to do is to, no matter how frustrated or discouraged you might be in trading right now, or if you're doing great in trading, either way, to recognize the fact that managing risk does come with downside as well. But the downside to managing risk is far less. I mean, far, far, far less than the downside to not managing risk. Because when you don't manage risk, you blow up the portfolio. Yes, there will be times where these people, when they're not managing risk, things work out for them temporarily, but they're not building their portfolio. They're not building their house. They're not building it on a firm foundation. They're building it on sand. And when the winds come in, it blows their house down. But if you build your trading career, if you build your trading profession on it, you build it upon the rock. When the winds come, when the storms come, that foundation, that house, that portfolio that you have built, it will not wither away. So keep that in mind. Trading is hard. It's difficult. Man, I know that better than anybody. I've lost plenty. I've won plenty. But overall, I've managed the risk. And I do that regardless of how uncomfortable it makes me in the market, how many losers I have to take in the process, because I know that because I manage the risk, when the profits come, they're going to far exceed anything they're going to far exceed the losses that I've taken over that time period. So that's my spiel for today, guys. Not a lot of charts, not a lot of activity on that front. I just, there was some things on my mind that I wanted to get across to you, because I see it in the emails, I see it in the questions that I get time and time again, that people want a miracle formula for trading, and it doesn't exist out there. Instead, it is a tough environment, and oftentimes you're squeezing pennies trying to get ahead. And the more that you come to grips with the realities of trading and just how difficult it is, the better off and the more profitable you will be long term. All right, this is Ryan Mallory. I'm going to sign off for now. I'm probably going to do another Google Hangout here on Friday, so tune in for that. I wish you guys all the best, and if you have any questions, feel free to email me at ryan@sharepointer.com. If you'd like to join me in the SharePointer Splash Zone, you can do so by signing up at sharepointer.com/splash. With that, you get access to the chat room and all my alerts that manage the risk of the trade. And I hope to hear from you. Hope to see you in there. God bless.